Thanks for clicking! The Toronto Regional Real Estate Board has released Toronto's real estate data for the month of July, showing price drops all across the board.
It's just a stutter step. Like I said, it's no biggie.
Indeed, the board noted that although we have been seeing price drops, it is expecting sales to increase over the next few months, as the cost of borrowing is set to continue to drop. And, as we'll see, that could in fact be the case, with dismal economic data coming out of the United States sending yields, which is what really matters, plunging. So what I want to do today is go over Toronto's real estate data for the month of July, take a look at what we're seeing coming out of the United States, and then discuss potential impacts on our markets here in Canada. As we'll see today, Toronto's market is slowing down and slowing down fast, with a major upsurge in the amount of inventory available, but interest rates are falling, and we're about to see a great big test of the Toronto market this month. We'll obviously continue to track Toronto's market on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, and that was down in July. The benchmark in June was $1,110,600, and that fell about $13,000 to $1,097,300 in July. So that's a $13,000 decrease in the benchmark price since last month, but a $64,000 decrease since this point in time last year. Back when RBC said Ontario would be seeing moderate price gains going forward.
You're looking out for us, right?
And the average price was down as well, but much more substantially. The average price in June was $1,162,000, and that dropped about $56,000 to $1,106,600 in July. So that's about a $56,000 drop from last month, and a $12,000 drop from this point in time last year. Or, as Reuters puts it, prices slightly up, with the average price increasing 0.2% from last month. Is like AI writing this?
I learned from the best.
Fair enough. And the median price fell as well. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under that price. The median in June was $990,000, and that dropped about $40,000 to $950,000 in July. So the median price down about $40,000 since last month, and down about $24,000 since this point in time last year. And the price drops make more sense when we look at the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for Toronto to completely run out of homes for sale. The MOI in June was 3, and that bumped up to 3.2 in July. That's the most amount of relative inventory that Toronto has seen for at least the past year. And finally, the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $95,000, the SLPR would be 95. Toronto's SLPR in June was 100 and is now sitting at 99. So, on average, homes are selling for 1% below asking price.
Well, I'm the best there is, plain and simple.
So, we have the benchmark price down $13,000, we have the average price down $56,000, the median price down $40,000, we have a bit more relative inventory on the market, and homes are now selling for under asking. With that said, July did see a marginal increase in the number of sales, with July of 2023 seeing 5,250 sales, compared to 5,391 this year. The TRREB noted that the increase in sales in July could be due to the Bank of Canada's rate cuts, of which we've seen 2 over the past 2 months. With that said, looking at this chart, sales are still far, far below where they should be for the month of July, where they've been for the past 10 years.
I wake up in the morning, excellence.
And the lack of sales come as we're seeing a lot more inventory come to Toronto's market, with new listings coming in at 16,296, which is the highest amount of new listings to hit Toronto's market in July, save for a brief period during COVID, for the past decade. And with the dearth of sales and all this new inventory coming to the market, this has led to a massive amount of active listings sitting on Toronto's market, with the number of active listings sitting at 23,877, far outpacing the number of active listings that Toronto's had in July, again, for the past decade. And with so many active listings sitting on the market, so many listings coming to the market with so few sales, Toronto has now shifted to that of a buyer's market, officially, with the sales to new listing ratio sitting at 39.7. And with any SNLR that's below 40 being indicative of a buyer's market, Toronto now has a real estate market more in favor of the buyer for the month of July that it's had, again, for the past decade. Which means, as we've talked about so many times on this channel, finance conditions, home inspections, under-ask offers. Don't let the Jim Cramers of the real estate industry pressure you into making an offer that you don't want to make. Protect your financial interests.
I don't like your tone.
So, with all of this inventory sitting on the market with so few sales, we are seeing Toronto's real estate market move very rapidly in the favor of the home buyer. With all of that said, we are now finally starting to see some signs of interest rate relief, with bond yields plummeting over the past week on the news of a potential recession coming to the United States. The yields on the 5-year Government of Canada bond, which is what dictates fixed rates, not the Bank of Canada, despite what is continually and perpetually intimated by the media and the usual suspects, are down 20 basis points over the past week, and down about 50 basis points over the past month, with fixed mortgage rates following suit. In fact, you can now get a decent 5-year fixed insured mortgage rate for about 4.59, which is right about where it was in April of last year when the market started taking off, which means we finally have a test available, as fixed mortgage rates are now where they were back when the market took off last year, when the Bank of Canada raised rates to stop the market from taking off even further. So now, when we look at August data set to be released in a month, we'll be able to actually have a 1-to-1 test. Now that that cost of borrowing is back to where it was, then if it was just interest rates preventing the market from taking off, and not the economy and not prices, then we should see a major upsurge in sales in August.
He just said it.
If we don't see a major upsurge in sales, then that could indicate that something else is going on, be it concerns over the economy, worries that the inflation fight is not yet beat, and, judging from the US media, maybe concerns over the US economy as well. Given the extent to which we've seen the market panic over the past few days on concerns over a recession coming out of the United States, I'm not sure that Canadian homebuyers, that Toronto homebuyers, will have the confidence en masse to flood back into the market, despite what the usual suspects are no doubt shouting on social media. As we've talked about so many times on this channel, those drastic rate cuts being promised by the real estate industry don't come unless we also get a weakening economy. And if those weakening economies are here, if we finally, years later, hit that point, it's not clear that homebuyers will have the same level of confidence that they did when the economy was hot. Whether or not that will be the case remains to be seen, but we will obviously continue to track Toronto's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.